Fellow traders, 'tis I, the Rumpled One, coming to you on Thursday, July the 10th. The year's 2025. Let's talk trading. Desperation. These videos are for educational purposes only. Your results may differ from mine. And I want you to remember that trading is extremely risky and you can lose all of your money. So if you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And also, make sure you have risk management in place when you trade so you do not lose more than you're willing to lose on any one single trade or during any one single trading session. Now, why would I talk about desperation? I received an email from a trader, somebody who watched my videos, and thanks for watching. And thanks for the faith that you place in me and my indicators and my methods. But from what you wrote, it's like you asked, where can I get the indicators? So I went ahead and emailed the MT4 mother load to you, and there's, hundreds of indicators in there. But, you said you've got some bills to pay or debts to get rid of. You basically sound desperate. And so that we're all on the same page, desperation is a state of despair, typically one which results in rash or extreme behavior. Now, trading is the last place you want to be if you're desperate. It's like being in a casino and you got to win the money. Usually you wind up walking away with what we used to call elephant ears, empty pockets. You pull your pockets out. And anyway, um, you have to understand something. My indicators are not going to make you money. You might be able to use my indicators to make money, but my indicators and my methods alone are not going to make anyone money. What you have to do is you have to learn to trade. And once you learn to trade, you might be able to use my indicators or my methods. Because you see, trading just isn't, entering and exiting and making money. There's a few more things to it. And the big part is the money management and the risk management. And that's why, you know, I say day after day, video after video about risk management. In the beginning, I used to always say, stop losses are for sissies because I was trading the buy zone and the stop loss is built into the system. And everybody kept asking me, let's see, let me find that screen here. Oh, yesterday looks like we had an inside bar. No wonder price moving the way it was. So the buy zone to me was it was just obvious. In the stock market, the stocks I were trading, if they would go up a dime to 20 cents, chances are they'd hit 50 cents. So I'd jump in, around plus 10, plus 12 when I could get in, and then I'd look to make a dime. Why a dime? Only a dime? Because I was trading 1,000 shares at least. So 1,000 shares is $100. So, I wanted to print a few $100 bills, some folding money, get some, dinner money or whatever. And that's about what it costs to buy dinner nowadays is 100 or more, depending on where you eat. If you're eating at a halfway decent restaurant. Now I'm sure there's some exceptions, but back to the point. The point is, you don't want to be desperate. So you've got to get that out of your head if you want to trade. You can't think, oh, I need to make this money to pay bills. No. What you need to do is you need to come up with a system, a method, or as Walmart likes to say, a plan. And you make a plan around a certain method. And you have your risk management. You don't have it so you're over leveraged. and then you execute the plan day after day, week after week, month after month. The next time I get Walmart on, I don't know if he wants to tell people how many pips he's making, but let's just say he's walking away with not just bucket loads but barrel loads of pips every day now. He is just really on a tear. Um, and the thing is he really doing anything different? Not too much. I mean, when we first got together, he was doing the wall mall method, and since then, he was giving a few of my indicators a try and a few of my ideas, and he's pretty much settled in the flip flop boxes because he doesn't even need the flip flop indicator. You can just see him on the chart, and then just pays off. In fact, I just got off the phone with him a little while ago. Let's see, where do I have a flip flop? I'm not even sure if I have a flip flop on here, but it doesn't matter. But you can see here, like there was this is M1. So there's a flip flop box long there. That was good for a couple of pips. And there was one right here. And then it went down. That was good for a couple of pips. And he was just tearing it up right here. We got on the phone, and I think I think we talked for maybe 20 minutes or so. He picked up something like 40, 50 pips. It was just, he was just tearing it up. But, basically, he likes to do what he's doing, the edge trading around these ranges. You can see price making these little ranges, and he'll just sell at the top and then buy at the bottom and then sell at the top, you know, and then, buy at the bottom and just knock it out. And this is pretty much the trading screen that he uses. And see right here, we just had a flip flop box there, and that one didn't, and it just broke it here. And you can see here we got the blue stripe telling you that the had a lower low, but the close was above the previous close, so that usually means price is going up. So you can pick any one of these little methods here or indicators, but it's just that's only part of it. You have to know um, when to get in, and that's part of your method. You need to know when to get out. That's your risk management and your money management. You and trading really is simple, but you have to learn. And the other thing is you have to be present. You have to be mindful. And, I know those are words that get thrown around a lot. They're like the buzzwords, but the thing is, you got to pay attention. You don't want to be late because you might go, "Oh, I'm only a pip or two late." That might be the profit that was to be had, because by being a pip or two late, and then price turning on you, then it's now you're quote unquote stuck. But you're really only stuck in your head, because at any point in time, if you're in a trade, you can exit out of the trade. So if you say you're stuck in a trade, no, you're stuck in your mind. What you're doing is you are in a trade. You're hoping the trade will turn around and go your way. And what you've decided is you are willing to wait for that to happen. Now, you see here, we got a gap up right here. Price gapped way up. So I would look for price to come back down and fill that gap. Now, it might happen in the next few minutes, might not happen till an hour from now. But there was this gap right here, and I was talking to Walmart. I said, "Hey, Walmart, did you trade? Did you fade that gap?" Meaning that think is he goes, yeah. He said he took a trade here, it went against him. There's a flip flop box, and he took another one here. Then he wasn't paying attention. I don't know if it's because he was talking to me or doing something else. He didn't get out. So then he had another flip flop box here. He added in. I think he got out right around here, and I think he picked up. What did he tell me? Was that the one he got 40 pips on? No, I think it was a different trade. But he definitely, I think he said he picked up about 8 or 9, maybe. I can't remember exactly, but he nailed it. So the thing is, what did he do? He stuck, he stuck with his method. He took his signal, but he blew it here. Then he came back in here, and because he followed his method, and then he was able to get out of all the trades with a profit. Every last trade was profitable or deal. Um, and I think they call them deals in Forex. So right here, we've got this red stripe. Now it just turned blue. And so that just shows you. You see the signal, you rush in. No, you've got to let that candle close before you take the trade. Because if you had taken it, there was only a couple seconds left, you'd be now been would have been burned. But then again, now it's coming back down. But you just never know. You gotta wait, let that signal be a real signal. A lot of times I'm guilty of that. I rush into the trade sometimes, and sometimes I'll jump in way too late. I will admit it to you guys, you traders. Um, it's just one of the things I have to work on as a trader. So you see here, maybe you would have lucked out there. But price still needs to come back down here and close that gap. And there it does. So you see, that's just one of the things where, um, you know, you pick this up from seat time. I don't know how many hours, chart time hours I have. It's decades. And so you learn these little things, and it's like some of them you follow up on and some of them you don't. And see, once again, it came down and hit the 35.50. What's that? That's a psychological. So right there, maybe you had your TP already set. And sometimes it's better to have those type of TPs set because you saw how price reversed. And so once again, that would have only been about 2, maybe 3 pips. But you do that 10 times, you've got 20 or 30 pips. How many traders walk away with 20 or 30 pips every day? So, trader that sent me that email, I'm gonna send you this video. So on that email, because I really want you to hear it, and I want you to listen to it till it sinks in. You might have to listen to it a couple of times, but I understand you've got bills to pay, and you see trading as a way to get yourself out of the bills, but just do not be desperate. Don't take unnecessary risk. Start slow. If you haven't been successful trading, then may I suggest you only trade a dime a pip. I know it's not going to make you rich overnight doing a dime a pip, but it's like lifting weights. You start out with a few pounds, you get stronger, you move up. It's the same motion. But the thing is, by doing it with the light weights, you train yourself, you develop the proper habits. And so then, going from a dime a pip to $1 a pip to $10 a pip to $100 a pip. You don't want to start out with $100 a pip, because what might happen is you might get lucky on the first couple trades and think you've got it licked, and then all of a sudden, as what was it, Market Master, that guy, back in my Pal Talk days in the early 2000s, you get your face ripped off, and he wasn't kidding. You could get your face ripped off because there's just certain things that can happen that you might not be aware of. Like the time I got my face ripped off on a stock halt, that was like a $5,000 rip, if I remember correctly. I traded this stock I never heard of, never traded, listened to somebody else, and the stock halted. And when it opened, I was down like 3 or 4 grand. By the time I got out, I was down like 5 grand. So use just understand, trader, do not be desperate. If you need to do a Zen thing or a meditation, whatever, clear your mind, learn how to trade, and then you'll be able to trade your way and pay off your debts, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.